How's it going? Welcome back. It's Jonathan. Now in this video, we're going to be taking a look at Bitcoin and where it's been and where it's going. And I'm just going to take a bit of a different angle today because the news is changing. And actually, let's go ahead and take a look at that now. What you may see is that everyone's quickly turned from bullish to bearish, and it's a very different dynamic because everyone, just last month was saying that the market's going to rebound, it's going to go to $100,000 and so forth. If you've been to my channel anytime now, you know that my sentiment on 2022 was always going to be bearish outlook for the year, and that's primarily because I build personally the forecast for each year well in advance, and I can, when you build these forecasts into the future, they use past cycles. So I know I'm building a forecast. All I'm doing is building a cycle into the future so I can get an understanding of what is likely to occur. And when we delve into these cycles, we can actually see what is the likely direction of the market, and then it's with that direction that we can make better assumptions or even better trades in the market, or at least protect our capital. So there's a lot of people who last year joined into our forecasting service, and they've been sending me thank you messages for the first 2 months of this year so far, just saying how glad that they are that they sold out around December and January, because the prices just kept falling. So they were able to actually use that to their advantage, and that's all I've come out and try to do is give you this information, give you this foresight into what is actually potentially on the cards for the market. So we can definitely see Bitcoin will continue to fall in March to low levels, Bitcoin under pressure. Bitcoin struggles at $40,000 as crypto rout quickens. Obviously, the Russia-Ukraine issues, war talk, that was all stuff that was put together in our political and economic forecast for this year. We put this together last year, so we go through this and we talk about all the cycles that are unfolding and what's going to occur in the year ahead. And definitely war, not involving the US, so I don't believe that there's going to be any war that involves the US, but war in general. So that's something that we definitely need to be keeping an eye on there, okay? So those are factors that could come into play which may affect the markets this year. I'm not saying that they're going to be the only things that affect the markets, but that's something that we need to be watching. So there's also this one with gold. This economic forecast, political forecast, that goes into the gold market. We've already put our gold forecast out, and let me just say, based on the forecast, and maybe I'll do a deep dive into the gold forecast in the future, but based on the forecast, I don't see much happening in the gold market this year. I think 2023 is the year that you probably want to be invested into gold. I think right now we're probably going to get a bunch of in-out sort of movements in the market, where the market rallies higher, then pushes lower, pushes higher, then pushes lower. But that's just the forecast, so we'll actually have to see what eventuates there. Anyway, the reason why I wanted to bring this to your attention and just waffle on about the US market is, this is our 2017 to 2021 cycle track, and we've done the same. We've also done 2022 cycle tracking, and we've also built, and we're yet to upload in the back end here, the 2022 to 2025 cycle tracking tool. So this is the forecast for the last cycle. That's the brown one. Okay, so the 2017 to 2021 cycle tracking tool, this is the brown forecast, and then the gold one is the actual market behavior. Okay, so we can actually take a look and see that the forecast was suggesting lower prices into 2019, and then the forecast rallied, and then it declined into the 2020 period, and then we sort of had the rally from there on out. Now the gold one, which was the actuals, we can just definitely see how similar they are, albeit to different magnitudes there, because that's a different cycle that's playing out. But we can definitely see how the cycle tracking tool would have provided us a good guidance into the direction of the market over that long term. So yeah, if we just use this same basis and we actually even go into our 2022 Bitcoin cycle tracking tool, I'll open it up, but I'll just blur some of the page out. Let's go ahead and wait for that. So obviously I've blurred from this point onwards out, but we can definitely see that the market had a bias to the downside, with the brown line being the forecast and then the gray line being the actual. So there's potential that we could be heading lower still, for this market to, I'm not saying that the market's going to crumble like it did here, but the bias is definitely weakened to the downside. Now if we go out into this blurred section here, which you won't be able to see, this section here, we can definitely see now, well, I can see that not much exciting is potentially on the cards for this year. So I don't think there's any need, personally, I don't think there's any need or any rush to be getting into the market until mid-year at least, so you can still save your pennies and not have to worry about getting whipsawed in and out of the market. I don't think anything interesting is going to happen, but we'll have to see how that plays out. And if you do want to unlock all these forecasts and even see the US market, the Aussie market, and the gold market, take a look at the link below, because that link is going to give you insights into the market that you didn't think were actually possible. Okay, so with that said, let's go ahead and just switch over now to something else. So bring up this one, bring up this one. So I give a whole year of market turn dates in advance, and what I've done is I've snipped the first 4 months of the year, and I have just provided them completely free of charge so that people can see how we do it in advance, and then how people can actually use these to their advantage moving forward. So I'm just going to go through from the 3rd of January out to where we are currently, which is the 19th of February, just so we can get an understanding of how the market's moved and what it does around these dates. So 3rd of January, let's take a look. The 3rd of January was this minor top here before the market fell over, so the market moved higher into the 2nd, and then on the 3rd it started to move down. Now the next date was the 8th. So we moved down, and the market didn't hit a bottom on the 8th, instead it hit the bottom on the 10th. Hit a bottom on the 8th, but the actual bottom was the 10th. But what I like to do is I like to see where my closes are. So this is the 8th here. We can actually see that the close didn't close below the 8th. So still a significant date to be watching. The next one was the 13th. So the 13th is this black bar here. Boom, boom. And then the next one was the 16th. So the 17th was this one. The low was the 18th. The market did reverse before it slammed lower, and the forecasted date was the 25th. 25th is here, but the market came in on the 24th. Now, you might be thinking, well, aren't these dates technically wrong? Well, yes and no. I say yes and no because no, obviously we did get some dates hit bang on, but you got to remember that when I calculate these dates, I did these ones in September 2021. Okay, so that was like 4 months in advance. I looked into the pattern that was playing out in the markets, and then that's how I pinpointed these dates. We can get more accurate dates within a week of the date actually coming to fruition. So there is a strategy which I have not taught anyone, mainly because it's my strategy. I haven't taught anyone how to do it, but when you see me drop bombshells on the videos or even in the Facebook groups, and I try to pinpoint the date more accurately, it's because I'm using another specific strategy, which I won't go into detail here, but it gives us the ability to find the date within 24 hours of the date actually occurring. Now, I always say give each date 24 to 48 hours to play out, because these dates here, you might have, plus or minus 1 to 2 days. And the reason for that is just the way that they're calculated, and we won't be able to know if it's going to be a higher or low until the data is played out plus 1 to 2 days, okay? Unless we are using a recalculation method, which I was just speaking about, which gives us an idea on how the market's moving. So let's go ahead and just take a look at the second now. So the second, first was that one, and the third was the bottom. So you see the market was running higher, and then on the second it turned, and then the third was actually the bottom. So the third in this case was the low, and it wasn't the second. But let's go into the next one, the sixth. The sixth did nothing. So what we can see here is that this was the sixth here. The market stormed through the sixth and nothing occurred. We see this indecision in the market occur around the sixth, but that's about it. Nothing actually eventuated, and the market didn't actually reverse. Then we had the 12th. So the 12th was this low here. So that's the 12th there. So this is the 6th, nothing happened. The market moved down, moved into the 12th. And then I didn't publish the next date, which actually occurred around here. I didn't do that on purpose because I'm trying to find the major swings in the market. And then the next one, as we can see, is the 24th. So here's how it plays out from here. It's the 19th, it's the 19th right now. So this is the 19th bar. The market can do two things. Now let me just stop this video right now just so I can get a better accuracy on the date that is potentially playing out. Alrighty, so where's the 24th? 24th is Thursday. Now I just took a quick look at another tool that I was using. The 24th is the date, but I'm actually betting that we may get, currently, so we're currently 1, 2, 3, 4, 5 days away. I think that what might happen is that the market may come down, not into the 24th, I don't mean down, but I mean it might change direction, not on the 24th, but instead on the 23rd, okay? So I'm just now recalculating from these past dates that I can get a better idea on what date I'm watching. So how does this play out? Well, there's two ways. The market can go down, in its zigzag formation. Let's just open this one up. So 1, 2, 3, 4 more days. So I can go 1, 2, 3, 4 more days down, and we're looking for a low, or it may go up 1, 2, 3, 4 more days, and then we might get a top. That's how you play these dates right now. So because we had a gap between this date and the next possible date that's playing out here, these are not trades that you'd want to take blindly. You're not going to be trading between the dates blindly, okay? So the dates give you good direction. So since you got the break here, you might be looking for the market to move down into the 24th, But if it reverses and it hits a top on the 24th, well, you need to have your exit rules. So that's where you use the dates as a guide. So for example, you might be placing your stop on top of each low, and then when the market moves above it and it moves into that 24th date, either lower or higher, then that is when you would actually buy or sell your crypto or stocks using those dates. Okay, now if that doesn't make sense, it's okay. There's many different ways that you can actually analyze this market, and that's just one of them. But here you are after the 24th, it's the 27th, so I'm expecting some quick whipsaw motion there, and then you have 3rd, 8, 13, 20, 29, 2, 7, 19, 25, 29. So as you can see, some of these dates are very close and they sort of vibrate similarly. Obviously each month the date is different, and sometimes we get large gaps between the dates, so the 16th, the 24th, the 20th, the 25th, 25, 27, 29, 29. So it's not just a static art on the 2nd of each month, the 8th of each month, 13th of each month, 16th of each month, 25th of each month. A bit more scientific than it is just guesswork here. But in saying that, there is a method to the madness, and that method to the madness is actually shown to you in the back end forums. Okay, so let's go ahead and just do a quick update on Bitcoin, because I've just waffled now for 10 minutes on that. So first of all, let's take a look at the Kagi chart. Kagi chart has turned red. So you wouldn't have wanted to be holding Bitcoin as it moved below that 42,000 mark. And if you were to buy in at the 38,000 mark, you would have netted yourself a nice little profit there. But the market has turned red, so that is something you need to be mindful of now. Let's go ahead and just take a look at the cycles here. So we are expecting a cycle low to come into effect in this March period. Okay, so anywhere between 24th to say the 20th of March, that is a period where we're expecting the market to hit a low. Now, if you look at the sheets that I've already given you here, one of these dates is considered a major date, and one of these dates is the one that I'm actually watching to play out as the main date for this month, March, for next month. So if you go into the back end, you'll actually be able to see which date is the one that I'm actually expecting the low to occur. But that's just something that I wanted to keep in mind here. Okay, so at the moment, there is no signal that the market is going to fall below this low. Because if it was going to fall below this low, I would have liked it to fall below the low in this period here. So there is currently no signal that it could be doing that. So what I need to do is I need to refresh our 90-day cycle just for now until we can get a bit of a better confirmation. And I want to run that cycle from here. So as we can see, what we have now is we have a mid-cycle low, and then we have our end cycle. So our mid-cycle point, and then we have our end of cycle for the 90-day Bitcoin cycle. Now we did this in the past where we were looking at the cycles here, and we were trying to join up if it's going to be left or right translation top. So all we're doing now is just mimicking that, and that's going to give us an idea on if we're actually heading lower from here or if we're heading higher from here. So here's how it works. This is the first cycle low. We had our midpoint, we had our end of cycle. Okay, does that make sense? So this move up, this move down was called a left translation top. Okay, after it moved down and it moved up, we should be looking at a bottom that is lower than this low here. Okay, so it doesn't have to be lower than this low, it just needs to be lower than this low. The reason why I wanted it to go below this low is because that would give us a sequence that would be a falling market, so lower highs and lower lows. But what we have now is we have this low here, and we have our midpoint and our end of cycle. And what that means is we're now watching for either a left or right translation top. So if you don't know what these tops are and what the left and right translation top, I won't go into it in too much detail here because I've done plenty of videos, but let me just draw two pictures for you to watch. Okay, left translation top, right translation top. Both of these will give us an idea if this market's moving higher based on what it does around this period here, which aligns with my major date, which is coming into effect in March. So that is the key. And I think that's the greatest key, and I think that's probably something that no one else on this channel, on this whole platform I should say, is going to be actually sharing with you. Okay, now if we just go take a look at the price again, what we can see, let me go ahead and get rid of you. VIX, so we're moving into actually sell zones on the VIX. So you got to remember, as the VIX Fix moves below this green one and rises above the red one, this is, whoops, sorry, that's the wrong way around. This is your sell and your buy zones. Okay, so the market traded around equilibrium for quite a while, but it's actually moving lower into what would be considered a sell zone. And we can actually see that these past areas that we drew out months and months ago are still acting as important resistance levels moving forward. So that's why I always say don't take them off your chart, or at least, make them, if you do want to take them off your chart, just make them take the transparency down. That way they're not as visible. Okay, so that's something you could do in that sense. So unless the market can get above this section here, I do think there's downward pressure on the market. Let's go ahead and just take a look at where to from here, because last time we spoke, this was the area that we were looking for the market to come into. It did come into this area here, and it breached into our lower box, which was used in the past for the September low. So let's take a look at how low this can go, because this is actually now pretty important. Alrighty, so I've just drawn on some more boxes just using some price clustering analysis. Now, price clustering analysis just uses various forms of price analysis and then finds where price is actually clustering, or where multiple levels are coming together. And generally speaking, I know it's going to sound a little esoteric here, but generally speaking, what happens in the past can give us a guide on what may actually occur in the future. Now, what I mean by that is that this run down here, or these runs like this, they can give us clues into what may occur, and they can do that by giving us ranges to work from, and these ranges can be used to calculate moves into the future that may give us another move down. Okay, so as an example, and I'll give this one away for free because not a lot of people actually go into this sort of theory. What we can see here is that the market moved down around 40%, so 39.5. The market moved down around 36.5%. So we're getting, a 3-point difference. If, and I'm just saying a big if, I actually haven't done this on the chart when I did the price clustering, but let's just say the market moves down another 36% or 39% or whatever. That would move us into this first box right here. So 39% down, let's just say 39% down, 39% down. That would give us a price target of 27,000, and then I did a lower band which is around 24,000. Now, a few months ago, you would know, I think it was maybe January actually, the first target that we had for this market was definitely around the 34,000 mark, and the second target was around that 27,000 mark, 26 to 27,000. That's still a very valid target, and I still think that that's one to be watching for this market, especially given that Bitcoin is definitely vibrating to those lower swings right here, as you can see. Until we get something like that where the market breaks, so this top right here currently, not just that top, but it also has to break through this price clustering box, which it is not currently, then the bias is still on that downward pressure. And I think that March to April is really going to be that key month where we see possibly the market just crumble lower. We'll definitely have to wait and see how that plays out. Now, just out of curiosity, I do a lot of somewhat advanced topics on this channel. If you are looking for more beginner friendly topics, please comment down below or send me a private message, because I had considered doing, say, like a whole 20 video series on everything from technical analysis to basic fundamental research. If that is of any interest to you, especially if you've come this far into this video, I will take your feedback very highly. So just let me know if that is of interest to you, and I will make it, because I have been hesitant to make it because I didn't think that many people would be interested in it. But if that is of interest, I will definitely do that for you, okay? Let's just go ahead and take a look at the US markets right now. So as you can see, the market topped out for the US market. The market topped out on, this is the weekly chart. Let me go ahead and change it to daily. The 8th on the weekly chart, and on the daily chart, it topped out on the 5th of January. The bias to this market, so if we just take a quick look, the bias to this market is definitely going to be lower if it cracks below this low here, which is around the 33,000 mark. And if it does crack below that low, then it's definitely down into mid-year. Now, I had the assumption, and I think it was around here that I did the last video where I said that a lot of people are going to get caught out to the upside. I had the assumption that the market would rally into March before making its next bend lower. So unless the market can reverse over the next couple of days, or at least the next couple of weeks, so 2 to 3 weeks, possibly that thought pattern is going to be invalidated and we need to reassess. But right now, this is the low to be watching, and that's the low that you'd want to be, cautious on the market heading lower, because the forecast for the Dow Jones, which we built last year, I'm just saying, like, there's so many people out now that are putting out bearish forecasts for the Dow Jones, and they're only telling you that based on what's already happened, whereas you'll know that the forecasts which I had spoken about last year were always 2022 is going to be bearish, and there's no way in hell someone could know that, right? Well, actually, we're just using the methods that Gann taught. Gann pioneered, and he learnt from people smarter than him how to build these things, and then people in our day and age have researched Gann's work and put together their own methods of forecasting. But in Gann's books, he walks through everything, how to build the forecast, how to make them work. So I just have to always stress that, like, I'm not doing anything crazy or overly complicated. I just read the book. I spent years researching it and backtesting it, and trying to see how it plays out. And now I'm just putting it into action and showing you real time how it's done. So that's that. The US market has a possible downward bias, at least until mid-year. But I was expecting a potential rally into the March period, which I guess I'm going to be probably invalidated on that. But that's that. I am in the process at the moment, which is quite interesting actually, of building some AI formulated strategies, and the intention with that is to generate buy and sell signals for the market and actually execute them automatically. I have been testing a few that are on the App Store, so you can actually go in and subscribe to some of these services on the iPhone App Store, such as like the James service and etc. So I have actually been playing around with them to see how they work, but I have my own strategies that I want to actually build into the AI formula and also incorporate, this whole time aspect. Okay, so I think that's a very important aspect that not a lot of people have actually taken the time to build into these artificial intelligence services. And I think once I put in that information and the AI knows what it's looking for, I think that's going to be a real killer. Anyway, that's all I have. I will speak to you soon. And if you really want to see more basic servicing, such as what is moving averages, or how to pick stocks, or what is a death cross and golden cross, and just those more of a basic stuff, if you're really getting started in this and you want to kick back and learn the basics, even Dow theory and simple Gann analysis, then just hit me up in the comments below, because I will, as I said, I will put together like a 20-part video series. I'm just going over all that information and just delivering you everything that there is to know in a short and crisp manner. So with that said, I will talk to you soon.